Harmony, powerhouse project, we know that. But today I'm going to show you how to read the price action of Harmony like a book. Did a video in July, August and September, and the analysis was all on point. I want you to see the skills that you can apply so you can read Harmony like a book, but it also applies to all cryptocurrency. So if you like today's video, like, subscribe, hit the bell notification. If you don't know me by now, my name is Jagir. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. Been trading currencies for over 15 years, featured in the best-selling book, High Probability Trading Strategies back in 2008. Now focus all on crypto. So let's dive straight in. So first of all, first video on Harmony, well, actually a few more before I think, but the one I'm referencing is July 5th. July 5th we did a video and we said, look, Harmony looks like it's making a wave too low. We did price, we did time, we did momentum. And what the reference point is this. This is the theory that I teach of high level Elliott wave, but I put it into simple terms, very, very simple terms. And what we're looking for is a move up and then a correction of an ABC for a wave two. And with Harmony, it just met all the criteria. Hence, we had this little box and it was textbook. So the next video was on 10th of August. And you can see the low was made and the market started to move upwards. So we pegged it really, really well to the T, time, price, momentum and pattern. There's more the price and the pattern, at what price and at what date. And you're able to kind of box it off, which is very, very cool. And then we did a video on the 1st of September to say, look, the 2 was pegged and it held, and we started to make this 5-wave sequence to the upside, and we should anticipate a correction. So today we're going to do an update of where are we now with Harmony, but I'm also going to give you a mini masterclass in how to read Harmony like a book. But the premise is it applies to all crypto projects. 50 to 60% of the times these patterns will be evident, and when they are, they just play out. Mass psychology, the psychology of buying and selling, it factors in the news, it factors in fundamentals, so you can be really, really simple, objective, non-emotive, and make business decisions. So let's dive straight in. So we can see this movement to the upside that we saw, that we said, look, we're expecting this correction to happen in one of these price zones in this particular time range. And to this red line here, this time date, which was September 12th, just bang on the date. Look at that, September 12th, bang. And we've got this beginning part of the correction. Right, so we've got this happening over here, right? So just want to reference that, right? Well, we said it's likely to get a correction, a leg up, final leg up, and then a correction. And it looks like we're beginning that correction right now in front of our eyes. So you ready for the masterclass? Right. If you want to know how to do what I do and what I'm going to show you now in a bit more detail, more in bite-sized chunks, I've created a free Elliott Wave Fibonacci masterclass, but I've also created courses, and at the moment I think we've got them at 85% discount. But just to show you, I break down Elliott waves in like real detail. So this is the course, beautifully designed. It's all in a nice platform, bite-sized chunks, lesson by lesson, micro steps, 3 to 5 minute lessons. So it's all there for you. And then we've got the Fibonacci. We've broken it down into foundation, intermediate, and advanced. Foundation means just the basic retracements. Intermediate meaning external retracements, which I talk about a lot in my videos. And then the advanced is more the extensions, the relationship between a wave 1 and a wave 3, and a wave 3 and a wave 1 to a wave 5, and how they have dynamic relationships. And if you know the key ratios, you can project with high probability where the end is likely to be of a move to the upside. They're going to be very, very good profit taking zones. So you want to know good entry points, but most people are very weak when it comes to profit taking. What I'm also going to add, I've added a couple of things already. I've added this. If you bought my course already, you would have seen this, how to 10x your money. This is a course totally independent of Fibonacci and Elliott wave. No Fibonacci, Elliott wave required, and you can 10x your money in a really, really clever, cool way. It's in the blockchain space. Do check it out if you bought my course already. But what I'm going to add shortly into the course is something that I filmed a while ago on time analysis. Fibonacci time is so powerful. I haven't really seen anyone else do it, not in the crypto space anyway. And if you can apply the time, and I'm going to show you that today, how to read Harmony like a book, it's so powerful. And I'll break it down for wave 1, wave 2, wave 3, wave 4, wave 5, and the ABC correction. So you often see me reference this. This is like the foundation of Elliott wave, and you want to learn this stuff because crypto is here to stay. Then this new token economy, you know, these tokens hold value and it's changing the way we live our lives today. And that's going to be the next couple of decades. It's just going to be a norm. It's just going to be a norm. So it's going to be very, very valuable for you to learn. So that's why I've created it for you. So take the free masterclass, which is free. And then there's some paid courses, which gives you the information. And I'm going to add the time analysis into the Fibonacci course because time's really, really powerful. So I've decided to add it in. It'll probably be added by, what's the date today? Today's September 20th. Oh, by the way, if you buy the course, you get access to my Telegram group, private Telegram group, where you get early access to my YouTube content. Because YouTube, what I do is I tend to film, but the content gets posted 3, 4, 5 days later because we just space out the content of 1 or 2 pieces of content per day. But in the Telegram group, you'll get immediate access. So you get like the premiere version. And I'm going to start getting Telegram in my Telegram group just to vote what coins you want me to cover. Because at the moment, I've got a list of 50 and I can't cover 50. So I'm just going to give you a bit more exclusive access. I'm also going to do maybe some private member stuff soon as well. So hope you're going to enjoy that. So let's dive straight into Harmony. What I want to do today is I want to zoom out and I want to delete. I'm going to just start again. We're just going to delete because I want to show you this. I want to just delete and I'm going to take the data back to here. I'm going to do it quite fast. I want to do it relatively fast, right? What the key thing here that I want you to take is on this move, when you see a big move up, and then you see a move to the downside that's bigger than any other move that's previously occurred, the trend has changed, right? So boom, boom, it's changed. So straight away, what I see is, and I'm gonna do this that fast. You can watch this in slow-mo. You can rewind it. I'm gonna do it quite pacey today. But I cover this in detail in my masterclass and in my courses. What you always anticipate when a correction occurs is 3 waves. Always an ABC or an ABC on a bigger degree and a lesser degree. These are like multiple degree wave counts. So what I'm anticipating is we should get a wave 2. I'm gonna put this here. Wave 2 some point down here. Again, I'm doing this, obviously we know how it's unfolded, but keep in mind I did this live, back in July 5th. This was where the data was. And then we did a live on August 10th. And now September 1st, and now today is September 20th. So you might be seeing this slightly later than September 20th, again, because we don't post content on the same day at the moment. But if you're on Telegram, you'll get it early. You'll get it early. So what we're looking for now is where is a wave 2 likely to end? So I'm going to do it quite fast today. So what we're going to look for is price first of all. We're going to measure the wave 1 low to the wave 1 high. And a typical correction is forget it there. Is 50%, 62%. And if you want to just get to the end of what's Harmony doing right now, it will be in the timestamps. You can skip to the end. But if you want to know the how, sometimes I just like to cover the how so you kind of see the method behind the madness. So we've got basic broad time retracements. Now, most people know about time retracements, so that's not giving us that much of an advantage. But now what we can do is some broad time. So that was price, and then we can do some broad time. So a typical time is typically minimum 50%, typical maximum is 100%, and then a typical maximum is 1.618. So these are the 3 zones. But because there's only one wave down here, we know this is unlikely to be the end of the correction. We always anticipate 3. And now we're in this zone over here. So we go, okay, it's going to more than likely be in this zone, just the way the wave structure is unfolded. So we can look at the information like this. All right, so today's all about how to read Harmony like a book. So that's the 2 broad. Now we're going to get a bit more narrow. What do we see here as a pattern with this wave 2? Well, what I'm seeing is a nice ABC correction. We've got this A, B, and it looks like a C forming, not confirmed yet, but in this zone. Then we've got something called an extension where we measure wave A, project it forward from wave B, because wave A and B tend to equal each other. If I just do that one more time, that didn't catch for whichever reason. There we go. And the key number here is actually the 100% and the 62%. The 100% is always the key number. So we know that's going to be a very significant number. External retracement is a bit more, I call this one intermediate level, whereas the extensions are a bit more advanced. But the key numbers are 1.618 and 1.272. So you see you've got these cluster and clusters. You've got these 2 time price zones in advance. So this one's not as relevant now. And then we're going to do some time. This is like a quick fire round, how to read harmony like a book. So now we've got this 100% of this wave A projected forward from wave B. And again, the key numbers that we want to be aware of is 62% and 100, right? This 100 here. Is it overlap? Oh, it overlaps. Bang. Yeah, perfect. Yeah, so we've got this really, really tight zone over here. So it's likely to be down here in this zone. So then we're going to do, we've got pretty much everything that we need. Now we're just going to do momentum. On the next bullish reversal, we should coincide with the low. So we can get rid of this one as well. We can get rid of this one. That one's not so relevant now, right? So we should get a low in this kind of range, right? We know this kind of range, right? And then we just let the data unfold, right? And it goes bump, bump, bump. Right, so what we've got here, you can see it's quite close in this range. We've got the one, and we've got the 1.618. We needed this one as well, 1.618. We got it in this range. It's either this range or this range. There's a few other things you can do to kind of narrow it down a bit more, but this is what we did in this video down here. We've got this box. We did a bit more on the time analysis, and it was just bang on in the box, and we took into consideration the 1.618. So next, what we're going to look at is what's likely to occur next, right? Well, let's just forget the macro. We want to just kind of zoom in a little bit, because now what we did in this video was anticipating this 5-wave structure unfolding, and then it did unfold. And now we want to see what's likely to occur next and how we can really peg it. Because when you see a 5-wave structure unfold, you want to be looking at taking profits. So I can do this about relatively fast. Let's have a look. Because I'm deliberately doing this as well, because sometimes if you don't know the method behind the madness, it's hard to make decisions on something you can't really understand. So now we believe this to be the wave 2 low. We've got this 1, 2, looks like a wave 3 forming. And now we've got a new high being made like this, right? So straight away what I see, and we said this in this video, we counted it, and even in this video, I think it was, yeah, on this one here, we counted this 5-wave structure before it unfolded. And we said what's likely to occur when we see an Elliott wave pattern of 1, 2, looks like a nice wave 3, wave 4, and then there's a 5-wave structure unfolding. We can then do some wave 5 projections. Again, I covered this in the masterclass, but this is the typical maximum wave 5 zone, right? And there's a few other ratios we can do, but that's the key number. And then there's a maximum of a wave 1 to a wave 5, and the typical maximum tends to be 1.618. Right, so now we've got this typical maximum zone, and then what I look at is there a sub-degree count? So if we just zoom in over here, right? I'm covering this because you want to be aware of this, because most people are just terrible at taking profits. Yeah, and when you see what I'm about to show you, you want to be getting ready to take profits, especially if you had like a 2, 3, 4, 5x, then you want to take some money off the table. Because often people make a good profit, don't sell, and then they just give that all back to the market. So you want to get into the habit of taking profits. So now what I'm seeing over here, if I just get rid of these waves, is down here, if we just go a bit further forward with the data, right? What I'm seeing, and you want to be able to do this in real time, is a 1, 2, 3, 4, 5. Check that out, right? And we can put that as a micro. We've got that as a micro. This one we can put as an intermediate. So you can just say it's different degrees of wave counts. So what this does for us is it says, right, we've got this broad zone over here, but now we've got this lesser degree wave count. This one we can put the waves back on so you can see it. 1, 2, 3, 4, 5. We can do the exact same projections, but for a more narrow range. And when you see that, that can be very, very powerful at taking profits right near the peak of the market. Now, we never know exactly where it's going to go because it can overextend, especially with crypto. There's a lot of panic buying that tends to happen on wave 5s. However, you can predict with high probabilities where the typical maximums are and then get ready to take profits, because we're in the probability game, not certainty game. So let's just do this. Again, I cover this in my course, these exact details, these exact metrics. In fact, one of the things I've put together for you in the course as well is like a PDF. And for each wave, it will break it down for you. It will look like something like this for wave 2s, wave 3s, wave 4s, the key pattern things that you need to be aware of, the key price, and the key time zones that you need to be aware of. This is for wave 2 that I've got over here. So now we've got this particular zone over here, but the key numbers we need for wave 5 is 62% to 100%. And then we'll do an external retracement for a wave 4. And the two key numbers for a wave 5 are 1.272 and 1.618. I'm deliberately doing it fast, but now we've got this tight zone over here. This is going to be more relevant down here. So then we can go on the next bearish reversal. We want to take profits. So if you saw my first video on July 5th when we were projecting this wave 2 low, and you bought and you managed to hold most of your position for this, now we want to be getting ready for profits at this stage. Obviously, this is a bit in hindsight now, but if you saw my previous videos, it would have been in real time. Right, so now let's just see how this unfolded. Boom, boom. You see that? It's like pegged it to the T. Look at that, right into that zone, almost just perfect, right? And when you see that happening, it's really trying to give you confidence on how powerful Elliott wave and Fibonacci is. Because today's video is about how to read harmony like a book, but really it's how to read crypto like a book. And 50–60% of the time, you'll see these really prevalent patterns. So what we're going to finish on today is now going to live. Let's just go to today's, right up to today's data now. This is where the market is as of today, as of just before 9 a.m. UK time, September 20th. This is when I'm doing the recording. So now we can delete all of this. And we've got a strong opinion of the market. My opinion is, so just so we're on the same page, is even though we've made a new high over here, my opinion of the market is that we should, over the coming months, see a wave 3. And a typical wave 3 is 1.618 over wave 1. So this is what I'm anticipating as a minimum. But we're probably going to see, knowing harmony and knowing crypto, probably going to see a 2.618. So this is what we're looking for. Right? This is the opinion of the market. We can get rid of this as well. Right? So overall, we're looking for that. Right? But when you see an initial move to the upside, is that a wave 3? Well, it's nowhere near the typical wave 3 zone. So what this looks like to me is actually a wave 1 of a wave 3. That's what that looks like to me. Right? And because this high has now been taken out, as in it's been exceeded, even though we're below it today, it's been exceeded, we can be relatively confident now that this wave 2 low should not, the price should not go below this. It can do, but it shouldn't go below that. If it does, we just need to reevaluate. So if this is a wave 1 of a wave 3, now we should anticipate a wave 2 of a wave 3, then a wave 3 over 3, then a 4 over 3, and then a 5 over 3. And again, that might sound like a lot of information, but when I cover the Elliott wave in my course, I do the masterclass, but in the course, I break it down so you can really understand the the nuances. So now let's just finish up on this. Right, so let's just bring it in here. Let's just bring it in here. Bum, bum, bum. All right, so what's the typical correction for a wave 2? All right, let's look at this. So now we can get rid of this wave, just keep it nice and clean. Yeah, get rid of this line as well. That's no information for us. All right, so now what we're looking at is really where is the correction likely, highly probable to end? Where in this zone? It's too broad just to kind of go anywhere. So what the typical is, again, we start with price. Again, this factors in fundamentals, technicals, buying behavior, selling behavior, profit taking, because most of the markets, especially crypto, is driven by speculation. Everyone wants to think it's fundamentals, but short term, people take profits and people FOMO in, fear of missing out, optimism, pessimism, fear and greed, etc. So we've got this basic retracement. A wave 2 is typically this 50%. This is 62%, we want 50%. to 100%. Right, and this is what I cover in, in the basics of, this is like a summary kind of snapshot that I cover in the course. Just some of the key metrics, price and time, and then how to do it. Because I can't cover all the coins that you're looking at, but you can learn how to do this. So now we've got this nice zone, right? So what this tells me is, I will assume, based on this analysis, that the correction is not going to be complete until price goes beyond, the time goes beyond October 23rd. Now that might seem like a short time, a long time, I don't know, but we just can be very objective. And we always anticipate a minimum of 3 waves. So then we look at the weekly momentum. So we can look at the weekly momentum in the top left. We're more interested in this. It's bearish, meaning that the blue line below the red. This is stochastics RSI. I covered this in the course as well. Stochastics RSI. And what we can then anticipate is, on this next bullish reversal, we're probably going to get something like this. Something like this. And more often than not, most people just can't tell if this looks like a continuation of the trend or if it's going to be a correction. But when you got the context of Elliott wave and you go all corrections, more often than not, again, we're in the game of probabilities, not certainties, corrections have a minimum of 3 waves, So knowing that, we go, well, we just anticipate a 3rd wave, and that will tend to line up with the momentum as well. When we get this 2nd wave, if and when we get this 2nd wave and the first part of this 3rd wave, we can get more accurate on the time and price. Where in the zone is it likely to complete? And then when we line that up with momentum, because it tends to marry up with the momentum, because the highs and lows, especially get the right settings, will tend to marry up like this. And then what we're looking for is a confluence of events. What do I mean by that? What we're looking for is pattern, which is Elliott waves, a wave C broken down to 1, 2, 3, 4, 5. So we're looking for ideally 2 degrees of counts, because today's about how to read harmony like a book, right? So we need to know this information. Then we're looking for price. What do I mean by price? I'm talking about Fibonacci price, right? Fib. But we're looking for a cluster. So we're looking for retracements. We're looking for extensions. We're looking for external retracements. And yeah, cluster. So we're looking for a few different key metrics that makes it more highly probable. Then we're looking for time. Typical time zones. We don't want to buy too soon, because if we buy on the first leg thinking that's the end of the correction and the price goes up and then goes further down, then we're going to be holding a loss. We can just be patient and wait for the optimal buying conditions. And then last but not least, we're waiting for momentum. And this is what you call a confluence of events. Pattern, price, time, and momentum. And when 4 different things are telling you the same thing is likely to occur, then there will be a zone. And that's how we did this video, by the way. This is exactly how we did this video. We got this zone based on exactly what I just showed you. And then we drew it out like this, and it hit. Like, look at that zone. It really hit. And then when we look at today's price, the zone maintained. Look, it held. And the price back then was 5 cents, and it went as high as 20 cents. It's like a 4x, 400%. But remember, we're looking for the bigger move, right? The bigger move, which is a price movement of around 50 cents, 55 cents, which is overall an 11x, 1,100%. Is there any other information? Well, right now, if you're not in harmony, then be patient for this 3rd wave. Patience. There's 3 things you can do in any market. Is you can buy, you can sell, or you can stand aside and be patient. And that one's probably the toughest to do, because most people become trading junkies, feeling like they need to be in the market all the time. But what you're waiting for is optimal conditions, and you can kind of narrow down where is the optimal condition in this zone. But as these other waves unfold, this becomes highly predictable. Just like this zone over here became highly predictable because of this A, B, C structure, time, price, pattern, and momentum lined up. And then we had this move to the upside. time price pattern lined up to say we should expect a correction. That was what we said in the last video on the 1st of September. If you haven't watched it, it's a great video. Just watch it because you'll see everything kind of pan out. But you can apply this to everything. And now is the time to say, right, if you're in it and you're happy to hold, and again, there's a few, because your trade plan, investment plan might not be the same as another person's, because some people want to just ride this wave and exit, which is a great idea. Another person might go, hey, I don't really care about that smaller wave. I want to ride the macro wave, and I'm happy to take the 50% dips and just ride it out, boom, ride it out and go all the way up to this point and then have your exit points. My personal favorite is both. Take some profits here, money off the table, risk-free. If you invested $5,000 and you're 4x up, so you're $20,000 up, or you're 15,000 in profit, is at least take the 5,000, the original 5,000 as profit, and you still got 75% in the position. It's okay to ride this down on a macro picture. It might take a 50% drawdown on paper, but then you're really being patient. Or you can exit fully and then look to rebuy back down here. So you got a few different options, and it's the individual, your personality, your time, your skill level, and everything else you want to take into account. So there you have it. How to read Harmony like a book. If you haven't already, do take my free Elliott Wave Fibonacci Masterclass. I've created it for you. And you will have options to buy my courses, and I've got an 85% discount happening. There'll be Elliott Wave Fibonacci and how to 10x your money, which is a whole different strategy, probably better than Launchpads or complements the other stuff that you're doing. It's much more safe and secure and predictable, but you'll see that in the course. And now I am going to add in the the time, because I've been realizing most people don't know about how to do time. So I'm going to add that in over the next 7 days. So if you like today's content, like, subscribe, hit the bell notification. Let's read a quote of the day. Don't buy into your circumstances. That's the name of this chapter, chapter 4. And the quote at the top, it says, it's by Benjamin Franklin. He who is good for making excuses is seldom good for anything else. So I go by this quote that I learned a while ago, which was, the way a person does one thing is the way they tend to do everything. So being more direct, the way you do one thing is more than likely the way you do everything. So if you find yourself making excuses, haven't got time to learn, I will do it tomorrow, etc., etc., that's probably going to be a common pattern in your life, but you can shift that and change it. Because look, crypto is not easy, investing is not easy. Well, it depends on your training level, right? But I've created the courses to make it easier, because everything is difficult before it's easy. But there is this. I would love to get your feedback. This how to 10x your money is a much easier strategy that I've created. I like it. I teach all my students this, but I'm going to be doing some more lives. If you buy my course, you get added to my Telegram, so you're going to get more exclusive content, more premier content, in the sense of you get this first. And yeah, we're going to do some membership stuff soon as well. So if you like today's video, like, subscribe, hit the bell notification, and I will see you soon.